I'll have to be honest with you. First thing I'm going to mention right up front is it's free. I like the service when it's free because, you know, you can tie up a lot of money in different services, and from experience I found out that sometimes you can pay a lot of money and you may not be getting that much out of it.
Good afternoon, welcome to GrainTV. My name's Cody Bills. Today is Wednesday the 20th and we have the grain markets moving a bit lower here today. Let's turn over to the grain hedge trading platform and see where we closed off the day. Corn trading down 2.5 cents, soybeans down 7 cents, and wheat in Chicago mostly unchanged here, finishing up a half penny. Now we do have ethanol production out today. We're going to talk about that. We're also going to talk about export sales expectations for the report that comes out tomorrow, and we'll talk a little bit about the charting landscape here for corn, soybeans, and wheat. But first, let's get into ethanol production. You notice ethanol production here increased week over week, up 46,000 barrels per day to 958,000 barrels per day this week. So this is a nice jump. The last 2 weeks we have been behind 2013 production. This is a nice improvement here. So this is very positive for corn, I would say, and also very positive for overall ethanol production. This kind of gets us back into that increased ethanol production mentality, the trend that we've been seeing the majority of this marketing year. We have seen ethanol production running about 4.8% ahead of last year's pace. USDA is expecting roughly a 1.3% increase over last year. Now take a look at this weekly ethanol production chart. You'll notice this week's production was very significant. And you'll notice also that this is kind of the time of the year that we expect to see an increase in ethanol production. That's what we got. Now 2 weeks ago we had some plants kind of shutting down, routine maintenance, things of that nature. We saw production fall below 2013 levels and almost right around that 4-year moving average. Well, this week now we're well back ahead of those 2013 levels, seeing positive production during a time when we typically see ethanol grind at a relatively strong pace. This is a good report, and it's good here for corn. I think it helped keep corn from really breaking and continuing that downtrend. It's something that will not stop corn from continuing the downtrend, because as you look at this daily chart, you'll notice that it is very clear that from December till now we have a clear downtrend. And really, when you look at corn, we have a support around 355.5. We have a resistance level right up around 375. That's going to be difficult to break. I don't think we're going to really be able to get up over that 375, at least in the short term. I wouldn't be surprised to see corn continue its downtrend. When you just look at the fundamentals out there, when you look at the size of the crop, when you look at the weather, which seems to be cooperating, planting pace well ahead of pace. We have a 90% chance we see El Nino continue throughout the summer, an 80% chance El Nino continues in the northern hemisphere throughout the rest of 2015. When you put all that together, you look at the trend, I think it's unlikely that we break this downtrend that has been established. So let's talk a little bit about export sales. We do have export sales out early tomorrow morning. Expectations here for old crop corn between 400 and 600,000 metric tons. Expectations for soybeans between 100 and 250,000 metric tons. And expectations for wheat here between cancellations, because we're at the end of the marketing year for wheat, cancellations of 200,000 metric tons to possible sales of 50,000 metric tons. It's going to be interesting to see. One thing we know for certain is that we had a nice reportable sale here for soybeans. We seem to continue to get these reportable sales. 135,000 metric tons reported yesterday on a sale to China for old crop. So that is continued strength here out of soybeans, something that this late in the season you would typically not see. Soybeans, when you look at export sales and throughout the marketing year, really you see that front loaded. And near the end of the marketing year, you typically see, as South America is coming online, you typically see export sales really taper off there. It seems like soybeans continuing to show export sales, positive export sales week after week. And that's something that we saw reflected in the WASDE report out in the May WASDE report, we did see a revision for export sales higher here by 10 million bushels. And it's just something that we continue to see revisions. And so it's going to be interesting to see if we get another positive week here next week. Or excuse me, reported out tomorrow morning at 7:30 Mountain Time, 8:30 Central. Now, take a look at new crop export sales expectations. Expectations for corn new crop sales not very high, between 50 to 200,000 metric tons. Soybeans expectations between 150 to 350,000 metric tons, and expectations for wheat sales, new crop of course, between 200 and 350,000 metric tons. Now let's talk a little bit about soybeans. The one thing I want to issue here, yesterday we broke through the November soybean lows that were really printed back there in late September, early October. We talked about this in the morning commentary this morning. But first of all, I just want to mention that when you break through these lows, it is very possible that we see continuation or some sort of impulse lower. Now, we didn't get an impulse directly in yesterday's trade. Today, we did see continuation. We found a little bit of support near the end of the day. But I am concerned that sell stops have been triggered. I am concerned that this really ushers in a new leg lower here in this established bearish trend. So I am concerned about soybeans here continuing to drift lower, continuing this downtrend now that we've broken through these lows. So producers out there, I think it would be prudent to at least really look at your risk management strategy and think, if we go another 30 to 50 cents lower here, are you prepared? So if you aren't, go ahead, give us the office a call. The number is 877-472-4607. We can kind of talk through your strategy. And perhaps we can kind of identify something that will work right for you. When you look at wheat, this is kind of something that's very interesting because wheat has been exceptionally weak here throughout the better part of the marketing year. And now all of a sudden we get a little bit of a short covering rally last week, and we're hanging out right next to the 100-day moving average. I think one thing that we want to pay attention to, though everyone is saying that this is a short covering rally, and I agree, I believe it is a short covering rally, we are hanging right around that 100-day moving average. And oftentimes when you get up to that resistance level, it may take a little bit of consolidation around this price level to be able to move through it and even continue higher. Now, I'm not necessarily saying that we will continue higher, but I think it is something that you should consider, because these sort of short covering rallies can last a little bit longer than some people anticipate. So despite the fact that we have growing global ending stocks, there are some concerns on the table here. Russia, of course, a little bit drier here. Looks like the next 2 weeks we're going to see continued dryness over there. It's not something that's immediate, but it is starting to stress the crop a little bit. So that's something that's on the radar. Of course, throughout the U.S., we have exceptional amounts of rain going through that Kansas City wheat region. This is, well, if we continue to see precipitation here into next week, it's going to be the 5th week in a row we've had a really above average precipitation. We've even seen instances of localized flooding in Texas and Oklahoma. So this is something that now is on the radar of traders. People are very concerned about the crop quality down there and disease among the wheat. So these are issues in the wheat market that are being traded. I think it's helping keep wheat up at these price levels after that sharp short covering rally here that we saw last week. Other than that, guys, that wraps up today's show. If you have any questions about what we talked about, please give the office a call. The number is 877-472-4607. And remember, if you haven't done so already, take a demo of our 14-day free trial. See what it's like to have live quotes in the palm of your hand. We have a mobile platform. We also have a desktop platform, and we'll walk you right through both of those. So thanks a lot for tuning in. We'll see you here tomorrow, Thursday, for the export sales report.